Hi, I'm Dr. Lorne Carroll of Veterinary Evolution Partners. And in this video, I would like to address some of the questions that we are receiving with respect to the state of the market for veterinary practice sales. We're getting three main questions, and it's essentially what is happening in the marketplace, where are valuations sitting now? Is it in fact a good time to sell my practice? Is the second question. And thirdly, if you're in the unfortunate position of having tried to sell your practice or tested out the corporate waters and have either been overpassed or turned down, what do you do next? How do you deal with that? So addressing the first one, what's happening in the current marketplace? Where are we currently sitting? Well, we've witnessed in the past couple of years a tremendous upswing. Starting back a little bit more historically, like pre 2010, to give you an idea of what our current situation looks at comparatively. Pre 2010, the valuations would sit somewhere in a 3 to 5x normalized EBITDA. And even prior to that, hospitals were being valued based on an annual gross earnings, for example, 1 times. And so if your practice was generating 1.5 million in gross revenue, it was thrown out there that your value would be $1.5 million. Those techniques of practice valuations have certainly changed, and today they're being looked at more with respect to a normalized EBITDA, earnings before interest, taxes, depreciation, and amortization. Back in the day when it was 3 to 5 times normal EBITDA, it made a lot of sense to consider transitioning in an associate veterinarian. Made financial sense, made good business sense for a lot of reasons. Following the mid-2000, valuations started to increase due to the presence really of more than one corporate buyer in Canada. But the multiples still remained single digit for the average multi-doctor practice. Some specialty practices or practices with special circumstances, for example, owners that may have owned multiple locations, they would likely receive potentially greater multiples than that. In this time frame, private equity investors saw a great opportunity in the veterinary industry due to its highly fragmented nature, its general practice economics, the financial stability, resilience of the veterinary industry. And so they came in with great interest. There was a sharp incline in practice values in 2021 due to the competitive reasons in the corporate realm, with valuations reaching mid-20s and even more for some specialty practices with really good multi-doctor practices, or more than one location, for example, as I mentioned earlier. The high market value was very short-lived, however. It lasted less than a year, declining from early 2022 through to our current state now. Today, the market values continue to decline, and we'll find them now in low double-digit, single high-digit multiples. The industry experts predict the multiples to continue to drop into the single-digit realm again, claiming, quote, values will not rise again to the level seen in 2021 at any point in their lifetime again, unquote. So that's where we're currently sitting, is somewhere in high single-digit, low double-digit for the good average to good multi-doctor hospital. And so based on all that information, is this a good time to sell your practice? That's the second most common question we're getting. And really it's a bit of a loaded question because it depends on so many factors. Market values, though declining, are still better than they historically have been. So there's an argument there that yes, in fact, it's good to pursue a practice sale because of that. Still higher than historic values. However, exit readiness is very multifactorial, and there are many considerations: the legal considerations, tax implications, as well as efficiencies of practice all need to be considered. And efficiencies of practice, are things like staffing. There's a staffing crisis right now, a veterinary shortage. Scheduling, inventory, expense control, even facility structure and flow are important considerations before getting into conversations regarding selling your practice. The very minimum we recommend now is in the beginning is having important discussions with a tax accountant, a lawyer that's very familiar, has expertise in mergers and acquisitions, and a financial planner that can help decide if this is in fact the best time to sell your practice based on many factors, entire net worth, for example, being one of them. And in general, it's best to start your planning greater than 24 months in advance, especially if there are any restructuring issues that are needed with respect to things like capital gains, exemptions, etc. Another really important consideration, as I've alluded to, is there is a very significant veterinarian and technician crisis going on, where most facilities are having a very hard time finding the support they need, the staffing that they need to keep up with the business that's being presented at their front doors. And you're certainly not reaching your full potential if you can't staff your hospital to the level that is needed for the business that you have. The third and final question I'd like to address today is about what happens if you're in that unfortunate scenario where you've either been engaged in conversations with the buyers, or even gone as far as to go through negotiations and have your hospital passed over for a variety of different reasons. And the answer to that really is, the corporate buyers are not the only buyers out there. There are other people that will be interested in your practice, and that kind of interest is very dependent upon many things. Not just the financial situation of your practice, but where is your practice? Your demographics. That again, go back to staffing. Like how is your hospital staffed, and is it a one doctor practice, a two doctor practice, or multiple? All these things are very, very important in those overall considerations. What we're doing now to help in this is we're building a North American database of interested buyers for our Canadian market. We don't stop marketing a practice just because there's been a passover by a corporate buyer. A significant portion of our marketing is done to attract buyers so that we have a competitive and consistent pool of buyers to present to all owners that are trying to get ready for a practice sale. Right now, with the unfortunate decline in the Canadian market, it has interested more foreign investment. We are currently in discussions with several US firms now interested in looking at purchasing practices in Canada, simply because the market isn't as crazy high as it was last year in the 20s. And as the market continues to fall, as those multiples come down, it becomes increasingly more important to try to do things to increase your revenues, your efficiency, your EBITDA. All those things are what's going to drive the overall value for your practice. If hospitals don't receive offers from the existing buyers for whatever that reason might be, or they're simply not ready to sell themselves, we do recommend looking into an exit readiness program of sorts that is available to help improve in those perceived corporate deficiencies, the reasons why you may have been overlooked, increase the practice efficiencies, looking at expenses, etc., those sorts of things, in trying to aid in the staffing crisis, and certainly introductions to the professional legal advisors, the tax accountants, financial planners, the professionals that we work with. We will make those introductions at owner request. You know, at the end of the day, this is the for most practice owners, the most important financial decision of their life. And we simply want to help owners be as ready as possible, achieve an optimal timing, optimal value, optimal terms for their practice sale. I would suggest that if you have any further questions regarding this, reach out to us at www.vetevolve.ca, and we'd be happy to engage in more questions or providing more details at where things are at currently. Thanks very much.